Good afternoon, everyone, and welcome to the Symposium on Student Loans during the COVID-19 pandemic. The purpose of the symposium is to discuss with those who serve student loan borrowers about various topics on how to manage student loans during the COVID-19 pandemic. Panelists. They consist of a variety of stakeholders who serve student loan borrowers. They include a consumer advocacy group, state government, the Department of Education, and a trade association. I'd also like to thank the members of the public who are listening to the symposium. Thank you all for taking the time to join us to discuss the impact that coronavirus is having on student loan borrowers. We look forward to hearing from your perspectives. My name is Bob Cameron, and I serve as the Private Education Loan Ombudsman at the Consumer Financial Protection Bureau. As background, the Private Education Loan Ombudsman position was created by Dodd-Frank in 2010, and among other things, of internal and external stakeholders regarding student loans. This includes offices and sections within the Bureau regarding students and student loans, and externally with the Department of Education and Student Loan Ombudsman. Now I'd like to go over what you can expect in this call. Today's meeting will run from approximately 2 o'clock and will conclude at approximately 2:35. We will start with remarks from Director Kathleen Kraninger, and overview of benefits provided by the CARES Act, which will be presented by Joyce DeMoss, the Department of Education and Student Loan Ombudsman. The next agenda item will be a panel session with moderated questions and answers, and the final agenda item will be an overview of resources for consumers presented by Chris Gibbons, the CFPB Section Chief for Students and Young Consumers. I am now pleased to introduce confirmed Director of the Consumer Financial Protection Bureau in December 2018. From her early days as a Peace Corps volunteer to her role establishing the Department of Homeland Security to her policy work at the Office of Management and Budget for the CFPB, Director Kraninger has dedicated her career to public service, and it's my privilege to welcome her to today's symposium. Director?
Thank you so much, Bob. Good afternoon, and thank you everyone for joining the Consumer Financial Protection Bureau Symposium on Student Loans. I want to thank our panelists for sharing their insights and discussing this very important topic with us today. The pandemic crisis and the necessary response to mitigate health risk has had a dramatic and abrupt impact on all of our lives, particularly our lives. And right now, more than ever, consumers need access to trusted information to know where to turn for help and steps to take to manage their finances. As soon as the outbreak hit, the Bureau reached out to engage with all stakeholders for their perspective. We tapped into insights from our consumer complaint system to monitor the challenges that people are experiencing in the marketplace. And we quickly shifted to adjust accordingly through all of our activities, such as research, market monitoring, and consumer response. All of these efforts have informed our education and empowerment tools, such as blogs, symposia, and videos. And we continue to update these materials as new developments come in. For student loan borrowers, the Bureau is working to help them understand their options to mitigate the financial impact of coronavirus. We're letting student loan borrowers know that the Department of Education and the CARES Act have provided certain protections for borrowers with federally owned direct loans and federally owned federal family education loans. This includes suspension of principal and interest for these federally held loans through September 30th, 2020. Interest rates on the federally held student loans have been set at 0%, and there's now a temporary hold on collection of defaulted loans held by the federal government. For other federal loans, the CARES Act makes similar benefits available, but does not require servicers to provide them. Regarding private student loans, some lenders are offering assistance to borrowers in need, including short-term forbearance options, many for up to 90 days, waiving late fees, and offering their own reduced payment options. Again, the Bureau aims to be a trusted place where student loan borrowers of all kinds of loans can come for accurate, up-to-date information. We've introduced a number of new capabilities to help students, including our Paying for College tool. Notably, the CARES Act benefits, though, plan to expire this fall, and there will be another significant transition for student loan borrowers and the marketplace. By taking a proactive approach, closely monitoring markets and complaints, applying available analytic tools in a predictive manner, and engaging directly with stakeholders, we can continue to provide consumer information and tools to anticipate the challenges to this transition. Again, I want to thank all of the panelists for joining us today and sharing their expertise and insights. And I'll turn it over to Bob Cameron again, our Private Education Loan Ombudsman, to kick off the symposium. Thank you so much for joining today, and hope you stay safe and healthy.
Thank you, Director Kraninger. Now we'll get started with the first item on the agenda, an overview of the CARES Act and the benefits available for federal student loan borrowers who have federally held loans. Joyce Tomas, the Student Loan Ombudsman at Federal Student Aid within the Department of Education, will present the overview. Joyce?
Thank you, Bob. Thank you for that introduction, and thank you to your colleagues at CFPB and to Director Kraninger for this opportunity for our two agencies to collaborate on sharing this important information. So my job today is to talk about the benefits that have been authorized by the CARES Act for federal student loan borrowers. The CARES Act authorized, most importantly and prominently, the automatic suspension of principal and interest payments on federally held loans from the period of March 13th to September 30th of 2020. That means that federal student loan borrowers won't have to worry about making payments during this broad economic impact of this pandemic. Additionally, the interest rate on these loans has been set to 0. So no interest will accrue during this period. And in addition, if there is interest that is on the balance of the account, even before March 13th, that interest will not capitalize at the end of this suspension period. Thereby, borrowers may not be surprised by an increased monthly payment amount at the end of this suspension period because of interest capitalization. Suspended payments during this period are not considered as missed payments. Borrowers are not subjected to delinquency or collection efforts, and payments are reported to credit bureaus as fulfilled payments. This in particular is important for borrowers who might be in the defaulted loan portfolio who are engaged in loan rehabilitation with the objective of regaining eligibility for federal Title IV student loan assistance, but also for loan rehabilitation to remove a loan out of default at the end of that loan rehabilitation. Additionally, suspended payments will count toward loan forgiveness programs, most commonly in the Public Service Loan Forgiveness Program. That means for PSLF borrowers or borrowers who are aiming for forgiveness under PSLF, payments that would have otherwise been made during the suspension period will tick forward toward that 120 months of payments that's required for PSLF forgiveness. At the bottom of the slide, you see a URL to the Federal Student Aid's studentaid.gov website, and I encourage you to use this URL to bookmark this in your browser so that you can refer to it, because it contains a set of frequently asked questions pertaining to the relief provisions that are being granted. The rate at which it's being updated has slowed just a little bit, but it is being updated as certain technical questions and decisions are made by the department. Next slide, please. The CARES Act applies only to federally held loans, federally held student loans. So what exactly does that mean? Which loans are covered? The CARES Act specifies that direct loans are covered by these relief provisions. Those are loans that are held and owned by the Department of Education. In addition, there is a population of Federal Family Education Loan or FFEL program loans and Perkins loans that are owned by the Department of Education, both in the non-defaulted portfolio and in the defaulted portfolio. The loans that are not covered and were not included in the CARES Act provisions are listed as, and are included here, the Federal Family Education Loan Program loans that are owned by commercial lenders, Perkins loans that are held by schools, and private student loans or non-federal loans that are owned by banks, credit unions, schools, or other private entities. And this is an important distinction. One of the questions that we have seen come up as we have moved further away from the enactment date of the CARES Act is customers who have that mixture of loan types in their portfolio. They are asking us about the relief provisions and what's available to them. So it's important to make those distinctions. With that, I'm going to turn it back over to Bob so he can carry us forward into the next portion of the symposium. Thank you.
Thank you, Joyce, for that very informative overview on the CARES Act. We'll now shift to our second agenda item, a panel discussion with questions and answers. Our first panelist is Scott Buchanan. Scott is the Executive Director of the Student Loan Servicing Alliance, which represents all the major student loan servicers in the country. Scott has worked on higher education policy and student loan issues for nearly 20 years. Our second panelist is Michelle Streeter. Michelle is an External Affairs and Policy Analyst at the Institute for College Access and Success, or TICAS. TICAS is a nonprofit based in Washington, D.C. that focuses on policy and advocacy to promote affordability, accountability, and equity in higher education. Her work focuses specifically on improving the student loan system and ensuring higher education is accessible and affordable for all students. Our third panelist is Chuck Cross. Chuck is Senior Vice President of Non-Bank Supervision and Enforcement for the Conference of State Bank Supervisors. In this role, he manages a team that oversees multi-state supervision support for mortgage, money services businesses, payday lending, debt collection, and other non-bank supervisory areas. And with that, we'll go to the next slide and our first question. How do you know if you have federally held student loans? Scott?
Yeah, thanks, Bob. This is a really important question. As Joyce was talking about earlier, the CARES Act is applicable to federally held student loans. And oftentimes borrowers may say, well, if I have a federal student loan, is it held by the government or is it held by a commercial lender? And in general, I think it's important for people to know if you have a loan that was taken out in the last 10 years or so, you probably have a federally held loan. For some older borrowers, they may have a mix of federally held and commercially held or purely commercially held. That may not always be easy for a borrower to know or make a distinction about. So what's really important to know is that you can call your servicer to find out this information. Servicers today, if you are eligible for the CARES Act provisions, servicers have sent out to borrowers who are receiving those benefits notification. So if you've gotten that notification about your loans and you've already been made eligible and are receiving those benefits, if you haven't gotten the notification and want to check, then you can reach out to your servicer, often through our websites or by calling the servicer. For example, if your loans are older loans, then you may need to verify and make sure you're getting those benefits. It's also important to know if you're not eligible for the CARES Act provisions, you may have other options that are available to you. If you don't know who services your loans, you can certainly call the Federal Student Aid Information Center, and the number is provided here on the slide, and they'll be able to direct you to who your servicer is. If you have a private education loan, then you can either check a recent statement or bill that you've gotten from them, or you can check on your credit report. If you don't have any statements or bills that you've received recently for some reason, then you can check your credit report and we'll tell you who services your loans. So those are the ways that you can determine if your loans are eligible. It's important to make sure you're clear about, are you receiving that benefit? Has payment been suspended? And if your loans are not eligible for that, you need to call your servicer, and they're going to have options for you to either use forbearance, income-based repayment plans, or other things that can assist you during this situation.
Thank you, Scott. Now we'll move on to our next question. How will I know when to start making payments again? Scott?
Yeah, absolutely. For those people who are receiving the CARES Act benefits that are available right now about suspending payments until September 30th, those individuals are going to start receiving multiple notifications starting in August, at least 6, in fact, the law will provide, so that we will begin reminding borrowers that their payment is going to resume after September 30th. So those notices will come either by mail or email, and that'll give you plenty of time to prepare to returning to regular loan repayments. Also, I think it's important to remember coming out of this crisis that many borrowers may still be facing some economic impact from the situation. And if that's the case, then you really need to call your servicer to talk about what other benefits are available. Because even when these CARES Act provisions expires, we have a lot of tools that are available under federal statute and under guidance from the Department of Education that will allow you to have flexible repayment options. Those include income-driven repayment plans, which can really adjust the payment amount to what your level of income is, given your personal situation. You can also go to our websites and see a lot of the information through FAQs and other documentations about benefits that are available to you both before and after the suspension of payments. And again, to stress, servicers are here to work with our borrowers. And so if you have any questions, whether it's in August, September, or tomorrow, about what's going on with your loans or what your options are going to be, then call your servicer, because we'll be able to walk you through exactly what those options are and work with your individual situation to put you on a repayment plan that's going to best meet your needs, even once we begin repayment of federally held student loans in October.
Thank you, Scott. Now our next question. Borrowers with federally held loans are automatically placed into administrative forbearance. What advice do you have for borrowers that have other federal student loans? Michelle?
Thanks, Bob. So borrowers whose loans aren't covered by the CARES Act do still have a number of options for relief. So these federal borrowers, number one, they can request an administrative forbearance. Being in an administrative forbearance means that the borrower can temporarily stop making their federal student loan payments without becoming delinquent on their payments. If you were to request an administrative forbearance, that means that you would not have any payments due for as long as the forbearance lasts. Cancel any scheduled auto debit payments. After the administrative forbearance ends, you would have to resume making monthly payments. If you did wish to use auto debit at that time, you would then just restart those payments as they would not automatically resume. Those with federal loans not covered by the CARES Act also have the option of consolidating those loans into a direct consolidation loan, which would then render that loan eligible for all of the benefits in the CARES Act. Again, however, if the borrower does decide to consolidate into the direct consolidation loan, after the CARES Act 0% interest waiver period ends, the interest rate may in some cases be higher than what it was before. Any outstanding interest would capitalize, meaning that that would be added to the principal balance. So there are trade-offs to these options, but again, there are some kind of various options for relief that these borrowers can access. And as Scott mentioned, your loan servicer is able to provide you with the information about how your loan balance, your interest rate, your total amount paid over the life of the loan, all of those things would be affected or changed if you did choose to consolidate into that direct consolidation loan. So again, it's best to contact your servicer, ask them to kind of walk you through your options and see what kind of relief is available to you.
Okay. Thank you, Michelle. And now we'll move on to the next question. What are some warning signs or tips to avoid falling victim to a student loan scam? Michelle?
Sure. So unfortunately, there are a number of unscrupulous companies out there that have been looking for a long time before even this crisis that we're currently in to take advantage of borrowers and take advantage of how confusing the student loan repayment process can be by promising easy help for a fee, when in fact all these companies do is charge fraudulent fees to enroll borrowers in free federal programs that they already have access to, and also to mislead borrowers about what kind of benefits are available to them. So a couple of the major warning signs and red flags that student loan borrowers should be aware of when trying to avoid getting defrauded by one of these companies. These companies will often require you to pay an upfront or monthly fee for help. It is actually not allowed to charge an upfront fee for this type of service. So again, if a company is asking you for an upfront fee before they actually perform any service for you, that's a major red flag. In some cases, these companies may even ask you to pay them directly and then promise to pay your servicer on your behalf each month when your bill comes due. A major red flag if someone says that they will do that. Another sign is these companies will often promise immediate loan forgiveness or full loan forgiveness or cancellation of all of your student debt. Unfortunately, no one can promise immediate loan forgiveness of your debt. Most government forgiveness programs require some kind of term of qualifying payments or qualifying employment before your loans can be forgiven, some kind of application process. So again, these companies will offer borrowers that they have a special ability to negotiate with the federal loan servicer, or they know of a special deal that they can get the borrower under the federal loan program, but none of this is true. These special deals or special promotions don't exist, and any kind of payment levels that the borrower is able to access through federal programs such as income-driven repayment, all of those are set by federal law. And so again, there's no kind of special deal that a company is going to be able to work out that a borrower couldn't access themselves by having a conversation with their servicer. And then finally, I would just warn borrowers, again, if a company asks you for your FSA ID login information, that is another major red flag, because the education department or any of its partners that it works with will never ask you for your FSA ID password. And that password allows someone to sign legally binding documents on your behalf. It basically carries the same status as if you were to sign something over. So again, that's a major warning sign, and something that if any company is making you feel uncomfortable or you're not sure if it's legitimate, there are a lot of resources online that you can find out, what kind of company you're dealing with. But if you do need any help as a borrower kind of managing student loan repayment, or you just have questions or want to understand your options, your first step should be to contact your loan servicer. And then you can also contact, there are a number of reputable organizations that do offer expert help for either no cost or very low cost, such as the Institute for Student Loan Advisors. There's also a National Foundation for Credit Counseling, which offers nonprofit credit counseling services for borrowers. So if you are struggling or need help managing or understanding your loan repayment options, there are reputable expert options out there for you. But just be sure to know that there are these companies also trying to take advantage of borrowers. So try and see if you can avoid those if possible.
Okay. Thank you, Michelle. That was very informative. And our next question is, what are some options for private student loan borrowers if they cannot afford their payments? Chuck?
Thank you, Bob, and thank you to the Bureau for inviting the Conference of State Bank Supervisors to provide information on behalf of our state bank commissioners. As stated previously, the CARES Act did not provide forbearance or relief assistance for commercially owned loans, Perkins loans, or privately held student loans. So in late April, a group of 9 states came together to address this gap in coverage. I'll touch on this initiative in just a moment, but the first thing you should understand is that your search for relief should always begin with your loan servicer. You must be proactive here, and any assistance you obtain will be arranged directly with your servicer. Second, any assistance will impact the terms and conditions of your loan. You need to understand and carefully consider the impact of accruing interest during any period of forbearance and how much it will extend your loan payment schedule. Third, be aware of your rights. If your lender provides incorrect information, makes an error on your account, or denies you benefits that should be offered, you can report the issue to your state regulator, the Federal Trade Commission's complaint assistant, or the Consumer Financial Protection Bureau. On April 21st, 2020, the states of California, Colorado, Connecticut, Illinois, Massachusetts, New Jersey, Vermont, Virginia, and Washington announced payment relief for private student loan borrowers not covered under the CARES Act. Under this initiative, borrowers in this category who are struggling to make their payments due to the COVID-19 pandemic will be eligible for expanded relief. If you are such a borrower, you should contact your student loan servicer to identify the options that are appropriate for you. 15 servicers have agreed to provide relief options, which include providing a minimum of 90 days of forbearance, waiving late payment fees, ensuring that no borrowers is subject to negative credit reporting, ceasing debt collection lawsuits for 90 days, and working with borrowers to enroll them in other borrower assistance programs such as income-based repayment. If you'd like additional information about this program, including the list of participating servicers, you can visit the banking department website of any of the participating states or go to the Connecticut Department of Banking site at portal.ct.gov/DOB. In closing, I'd like to thank Director Kraniger and the Bureau for including the state system in this important message.
Thank you, Chuck. That was very helpful and informative. We'll now move to the next part of our agenda, an overview of resources for student loan borrowers. This will be presented by Kristen Evans, the Section Chief for the Section for Students and Young Consumers at the Bureau. Kristen?
Thanks, Bob. I wanted to highlight some of the resources that were mentioned in this presentation and provide some helpful links to access those resources. If you need further information about your student loans related to the COVID-19 pandemic, as mentioned before, the Department of Education and the CFPB, as well as other federal agencies, have provided trusted resources for you. The Department of Education has provided a website full of helpful FAQs for borrowers with federal student loans, as well as information for students who are currently enrolled in post-secondary education. The CFPB has also created a web page containing information from different products, from student loans to mortgages, as well as other topics to protect your finances related to the coronavirus pandemic. Now, if you need specific advice related to your student loans, we've also provided some helpful resources for you on the slide. As has been mentioned previously in this presentation, remember to contact your student loan servicer with any questions. They are there to help you. Also, your financial aid office may be able to provide some information. And don't forget to check out state-based resources, as many of them have been mentioned by Chuck Ross in the previous slide. If you run into problems with your student loans, you can look to the Department of Education and to the CFPB for more information. Links to information on complaints are provided here. Thanks, Bob, and back to you.
Thank you, Kristen. I want to thank Director Kraninger and our guests and panelists, Joyce DeMoss, Scott Buchanan, Michelle Streeter, and Chuck Cross, as well as Kristen Evans for this informative symposium. For student loan borrowers, I urge you to take advantage of the resources available to assist you during the pandemic. The Bureau and the Department of Education, Federal Student Aid have many resources available online that are regularly updated. Also, if you have questions about your options, do not hesitate to contact your servicer or the financial aid office at your school. Remember, benefits under the CARES Act are free. If you run into problems, do not hesitate to contact CFPB or the Department of Education, Federal Student Aid Ombudsman. Again, I want to thank everyone for a great afternoon and an informative symposium on these important issues. The symposium is now concluded, and we are adjourned. Thank you.